Hello, everyone. So, we are back with our weekly recaps, and boy, has it been a week. So, let's just start off with the stock market, as that has been one of the biggest hot topics this week. So, the stock market took a really big hit on Thursday, April 3rd. Now, of course, this is all in response to the new tariffs that President Trump announced. And so, of course, Thursday going into Friday, the stock market responded, and did it respond fast and furiously? Just to give you some data points, so the S&P is down 9% this week. The Nasdaq is down 10%, and the Dow Jones is down 8%. So according to these latest stats, I believe Thursday or Friday has been the worst day in the stock market since the pandemic. So we've had our biggest loss in a day in the last since 5 years ago when we were initially in the COVID pandemic. So that is definitely pretty telling, pretty tough. But the one thing I do want all of us to do during this time is to not panic and really take a pause, understand what is happening around us. Now, before I go into that, because of course I have my little tangent or soapbox I want to talk about in regards to the stock market. But the tariffs, essentially, we had something called Liberation Day, which I believe was Wednesday, April 2nd. So that is when the administration announced what they call reciprocal tariffs. Basically, it's kind of like a tit for tat tactic. So, according to them, their words, not mine, whatever they have done to us, we're going to do to them. Plus, this is going to be on top of the 10% baseline tariff. Now, from what I've been seeing and reading, the math they're using to calculate these tariff percentages is definitely questionable. But we won't go into too much detail on that. But of course, the tariffs are ranging anywhere from a 10% tariff all the way up to 50 plus percent. So, of course, this is going to have a huge impact on trade, on the prices that not only we as consumers pay for goods, but what businesses pay for their products and services. Of course, they will then pass down to us as consumers. So, we are all going to feel it if this actually does come into fruition. So, just to give you some context, so these reciprocal tariffs are set to go into effect on April 9th. But the baseline 10% that was announced a few weeks ago, that is set to go into effect April 5th. So, I think what is happening now is some countries like China, right, they've already implemented or announced a retaliatory tariff of 34%, while other countries are trying to do a mad dash to essentially negotiate terms with the United States. And so all of this is really causing the stock markets to be really volatile, and they will continue to be this way until these tariff conversations have settled. And when that will be, no one knows at this point. I think that this is going to be a moving target until further notice. So, now let me get on top of my soapbox. So, the one thing I do want to say to everyone, whether you have a 401k, an IRA, whatever you are, whatever mechanism you're using to invest in the stock market, now it's not the time to panic. So, panic selling is one of the worst things you can do right now. But I get why that is your knee jerk reaction to what is going on. So, what I do find is when the stock market starts to dip, right, it's losing value. You're going to open, right, take your phone, open your 401k, your IRA, and all you see is red. And you are feeling as if, oh my God, I am losing money. And it's not a good feeling. And so, what some people will do is they want to stop the hemorrhaging, right? They don't want to lose any more money. So, they will go ahead and sell the stocks in their portfolio. Now, selling your stocks in itself isn't the issue here. It's the why you are selling is the issue. So, as an investor, you are going to have times where you are going to sell, but you need to do it strategically, and you have to do it from a point of view of where it makes sense. It's not a knee jerk reaction. It's something that you thought about. you're making a review of your portfolio, and this asset, whatever it is, doesn't make sense to continue to maintain in your portfolio. That's when you sell, not when you're opening your portfolio. Oh my God, the sky is falling. Let me sell so I can just take money off of the table. Now, but I get it, right? When it comes to your money, a lot of emotions are tied into that, right? You are saving up for retirement, maybe your children's college, you're saving for a house, whatever you are doing with this money, it has a purpose, and that purpose is important to you. So that I totally understand. But we have to take a pause and look at the bigger picture, because right now there's lots of doom and gloom going on right now. The news is like the sky is falling, the Dow Jones is down, right? 8%, the S&P is down 9%. Oh my goodness, the stock market is losing so much value. But if you were to open a chart to look at the S&P, the value of it current present day, it is still double the value it was this time 5 years ago when we were literally in a pandemic, right? And so when you put it into context, big picture, has the stock market taken a hit? Yes, it has. But has it completely gone to zero? No. Has it drastically dropped in value where, oh my God, it's not worth anything? No. When it comes to investing, you are going to have dips. You're going to have ebbs and flows. That's all par for the course as an investor. Now, the why, right? That's going to matter. There's reasons why we have dips. So, for example, COVID, right? We were in quarantine, millions of people were dying, businesses were shut down. There were so many unknowns. So the market, of course, responded and the market took a hit. But in the last 5 years, the market has, in fact, rebounded. So we always have to kind of go back to history. While history isn't a guarantee of future results, you can look at trends to see, well, how do we think this is going to pan out? And so, when we have times where the sky is falling, right, and the market is going down, it will at some point rebound. And so that's why you have to really pay attention to the numbers and not the emotions. And that's really the whole point of what I'm trying to get across. This is not what I wanted to discuss in the weekly recap. I have quite a few things I want to cover, but this is really important because I know a lot of people are panicking, and for a variety of reasons, right? The job market is trash right now. People are losing their jobs. Inflation is really mollywopping us, right? It is really making things so expensive. Groceries, housing, clothing, everything in between, right? And so all of these things are already causing us to feel lots of emotions, anxiety, fear, worry, and everything else in between. And on top of that, now we have these tariffs. And now on top of that, we now have the stock market losing and possibly causing you to lose a lot of money. So there is a lot in this. And so I don't want to minimize anyone's feelings. Feel those feels, but make sure when it comes to your investments, you are really paying attention to the numbers. Again, not using your emotions to make those investment decisions. Now, one thing I did talk about on TikTok earlier, I think it was yesterday, I mentioned if the economy or the stock market is too volatile for you right now, whatever you have in there, you can think about leaving it. But if you don't want to put any more money in the market, I get that. Maybe you should pivot and focus on some other part of your financial house, increasing your savings, paying down debt. If you own a home, work on improving your home. So that way you're still investing, but you're doing it in a different way. So just want to talk about that. We'll go into deeper detail on that next week in a future live, but I definitely want to talk about that quickly during this weekly recap. So moving on, the next hot topic this week is, of course, the TikTok ban, which seems to be a never-ending conversation. So the app was set to be banned again on April 5th. But earlier today, President Trump did give another 75-day extension. So this now means that TikTok and ByteDance have until June 18th to find a U.S. buyer for the U.S. portion of TikTok. Now, what's interesting is this time around, ByteDance has made an official statement, which they haven't made one in months since all of this had come up again. So, what they have said, they have confirmed that they are in negotiations with the US government and are looking forward to finding a resolution. So there's that. Now, what's also interesting, President Trump did make a statement. I think he was coming off of Air Force One, and he did mention that or alluded that he's using tariffs to kind of help the negotiations with China when in regards to TikTok. I find that a bit strange, but his words and not mine. But again, we will see how this all plays out. I do think that a lot of creators and small businesses can have a slight sigh of relief. I know many of them do make a lot of money on that platform. They rely on the revenue that's generated from that platform. So if it were to go away, it would definitely negatively impact a lot of people. Hundreds, thousands of creators, and also small businesses. So I do hope they do find the resolution, but again, only time will tell. So next up, that now this might have been not this week, but last week when I was on vacation. So Dollar Tree has agreed to sell, to sell Family Dollar. They're selling the company to two private equity firms for $1 billion. Now, what's interesting about that is Dollar Tree purchased Family Dollar for $9 billion back in 2015. And unfortunately, that investment just has not panned out for Dollar Tree. While both companies do focus on selling items at a low cost for a dollar, right? The brand alignment really just wasn't there. And I think Family Dollar had a lot more issue than Dollar Tree realized from issues at its factories. They found like rats and poop and all kinds of unsanitary conditions in some of their factories, which they then ended up having to pay out a settlement from a class action lawsuit. So many things with Family Dollar. So this is now going to be this, I guess, burden lifted from Dollar Tree. So now they can focus on revamping and basically rebounding from the issues they suffered by having Family Dollar under their umbrella. And of course, the stock market did respond positively to this information. The stock price did increase a bit. I think it's trading at $65 a share now. Let me just double check that so I'm not misspeaking. But definitely good news for Dollar Tree investors. So, and I know they've been trying to unload Family Dollar for quite some time now, but it looks like it is now actually going to happen. And why can't I find the app that I'm looking for? Um, 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 Let me see. Let me see. Hold on, guys. Let me take a peek here. I'm not sure why. Oh, here it is. Okay, so let's see. What is Dollar Tree trading at right now? So Dollar Tree, as of close of business today, is trading at about $68 per share. When the announcement happened last week, what is happening here? The stock did go up to about $78 per share, which is actually pretty nice. But then, of course, it came back down. But of course, the overall market is down right now. So there's a little bit of mix of good news helping the stock increase, but also everything else happening with tariffs caused the stock to decrease. But I digress. So that's pretty interesting. Now, next on this week's weekly recap, so Klarna. So Klarna was initially scheduled to have their IPO later on this year, but it seems that they are putting that on pause until further notice. So in case you don't know what Klarna is one of those buy now, pay later companies. So they give customers the ability to purchase an item now and make payments on it in the future. And of course, that has been a growing trend here in the US. Companies like Affirm, Afterpay, Klarna, I think Zezzle is another one. So this is definitely an up and coming industry, and it's essentially tapping into the credit market for people who can't qualify for traditional credit or just don't want to use credit to make certain purchases. And so Klarna was planning to do their IPO, and they have big plans for when they do eventually become public here in the US. Now, they are a Swedish company, and their plans are not only to compete with a company like Affirm and Afterpay. They plan to compete against companies like Chase, Bank of America, and Citigroup. Klarna is already operating as a bank as of 2017. And so when they do come to the States, they are planning to compete in not only the credit card space, but also they're planning on competing against companies like Visa and MasterCard in the payment network as space as well. So this is going to be really interesting. And so I do hope the IPO does still happen this year. I know I am definitely paying attention to it. Let me take a step back. So initially, I wasn't really paying attention to the Klarna IPO until I saw an article and I started to go down the rabbit hole and realize that Klarna isn't just like another buy now, pay later company. They are trying to, well, they are a bank and they're trying to disrupt the industry, and anything like that I'm a fan of. A company coming in and just changing the game that's going to force the other players to also, change things up. I'm all for competition, particularly if it's going to help the consumers. So that's why I am now paying attention to the Klarna IPO. So unfortunately, due to the market volatility, they are putting this on pause, and they haven't said until when. I don't know if it's going to be until next year, later on this year. I have no idea as I sit here right now. But once I do find out, I will, of course, post another video or include that in another weekly recap. Now, the last thing I do want to talk about today are mortgage rates. So mortgage rates are down slightly. The average 30-year mortgage is about 6.7%. Still high, but lower than where it was or where it has been in the last few months. And now what is going to be interesting is to see how the Federal Reserve is going to respond to what is going on currently in the market. Will they decide to cut rates to help counteract the inflation that we are having, and will potentially see with this new tariff situation? When I say new situation, tariffs themselves aren't new. Let me just clarify that. What I mean is we are having these new conversations where our government is reevaluating tariffs and their trade agreements. And so how that will play out is going to directly impact the stock market and every other financial market. So the Fed may have to intervene and reduce rates to help give some reprieve to the market. But of course, only time will tell. And of course, we'll keep you updated as we know more. So that is it for this week's weekly recap. I think we have a rough road ahead. But again, we have to stay steadfast. You really cannot panic and start doing all kinds of crazy things, right? Your financial house is going to be the best defense you have against what is going on right now. So the stock market is a bit too much to bear. I get that. Again, as I mentioned earlier, focus on the other parts of your financial house, particularly boosting up your savings, paying down debt, and all of that good stuff. Now, what I will say, though, in regards to the stock market, we have to start responding in a way that goes against our natural inclination. So when the stock market is down, that's when people tend to panic and feel like they should sell, when in fact, that tends to be the best time to buy. So my analogy I like to use is comparing times like these. We call it the dip. This is like a Black Friday sale. So stock prices are down, right? The price is less than what it normally has been. Now might be a good time to invest more. And I know that feels unnatural, right? Because you're watching money being lost in the market Why would I put more money into the market? But it kind of goes back to my analogy of Black Friday. When you are going to shop for Black Friday, you are looking for a sale. You are looking for a deal. You don't want to pay full price. And you have to kind of approach the stock market in the same way. Unfortunately, people tend to only want to invest when the market is doing well. And which I get, but you are going to have a better ROI on your investment if you are buying when the stock prices are lower. So I do hope that analogy kind of resonates, and sit with that for a little bit. But of course, with any investment, you always want to do your own research, use your due diligence. Don't just buy things arbitrarily. Make sure you are vetting these stocks and these companies before you make that investment. That's going to be my tried and true statement, regardless of a recession, if we're in a boom, whatever we're going through right now. That should always be your approach when it comes to investing, regardless of what you're trying to buy, whether it's stocks, index funds, real estate, cryptocurrency, a business, whatever asset you are trying to add to your portfolio. You, as the investor, must do your due diligence to make sure that it makes sense, that you also understand what you are investing in. So that's it for today's live, guys. I will talk to all of you guys next week. Take care.